We assumed that the strategic reserve is enacted and that the U.S. acquires 1 million Bitcoin over the next 5 years. We assumed that the market front runs these purchases once they're invested, and so the purchases would start at roughly $200,000 per Bitcoin. Financial assets grow at 7% and BTC grows at 25% for the next 25 years. Then Bitcoin's market cap will be 18% of global financial assets. So it will be a meaningful reserve currency.
Matthew Sigel proposes an intriguing scenario: the U.S. government acquiring 1 million Bitcoin over the next 5 years as part of a strategic reserve. The idea assumes that such an acquisition would catalyze significant market activity, with initial purchases starting at a projected $200,000 per Bitcoin. This concept positions Bitcoin as a critical asset in addressing the growing $37 trillion U.S. federal debt. The U.S. federal debt has been growing at approximately 7% annually. Sigel hypothesizes that with a shift to more disciplined fiscal policies, this growth rate could moderate to 5%. Under this scenario, Bitcoin's compounded annual growth rate becomes a vital metric.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
We assume, so right now there's $37 trillion of U.S. federal debt. It's been growing at about 7% a year. We assume that that rate moderates to 5% due to some degree of fiscal discipline that's imposed, maybe through the Doge administration. And if you do that, and then there's a range of kind of compound annual growth rates to assume for Bitcoin, and we have a matrix on our website that you can check out. Bitcoin's done a 50% CAGR over the last 10 years. If it did 25% over the next 25 years, then the value of the Bitcoin strategic reserve would be roughly equivalent to 25% of the value of US debt. So, that's just compounding. If you're growing something at 25% and the debt's only growing at 5%, it's obviously going to eat into it considerably. That CAGR is supremely important. If Bitcoin price only grows at a 15% CAGR, then the value only comprises 5% of the debt growth. So that's where, you have to kind of plug in your own assumptions. We have a long-term supply-demand model for Bitcoin that assumes it is used increasingly as a settlement currency for global trade, between 5 to 10% of global trade being denominated in Bitcoin over the long term, and that central banks own Bitcoin at roughly a 2% weight. They own gold at an 18% weight, so that doesn't seem supremely aggressive. But it's really that 25% CAGR that makes all the difference.
Well, I think that the growth rate is the single most important metric. I don't know what it's going to be. Feels like 50% for the next 25 years is probably not the right number, so it'll be something lower than that. And I think the hard part is really trying to evaluate how much Bitcoin is being held by these financial institutions, these corporations, et cetera. I like to think about for every dollar that goes in the system, what is the amplification for market cap? So if I put $1 in and it simply moves the market cap $1, it's going to be really hard to continue to grow at 25% year over year over year. One of the things that could help that is if Bitcoin is actually becoming more and more illiquid, which it appears that it has been, where people, companies, even financial institutions are saying to themselves, hey, I bought this at first because maybe I thought I could make money, or maybe it was kind of short-term speculation, but now I'm a long-term believer, I'm a long-term holder. I'm actually never going to sell. And so as you pull that supply into kind of those long-term hands, the circulating supply obviously continues to diminish. And so every new dollar into the system has this like amplification. And so I think that's a really important concept, is that we do need these long-term holders at size in order to kind of keep the growth rate going. And then the other thing is, if stocks grow at 8 or 9%, then you could make the argument that Bitcoin, gold is another example, should end up coming down somewhere, let's call it, 8 to 10, 12%, something like that. How long that takes will have a significant impact on what that compound annual growth rate is over 25 years. So if we continue to have 50% performance for the next 5 years and then immediately go to 8%, obviously that's not going to be nearly as attractive as kind of a slow decay in that growth rate. And the reason why that slow decay in growth rate is so important to me is it really is a function of how much more capital is out there in the market that does not yet own Bitcoin. And Bitcoin is very unique in that the higher the price has gone, the less risky it has become for the largest pools of capital. So if you were to take a survey of public pension funds, sovereign wealth funds, nation states, insurance companies, some of the largest pools of capital that end up really driving some of these other asset classes, the exposure to Bitcoin is very small, which is a great kind of bullish argument or a potential tailwind for Bitcoin. How quickly will we deplete that? Then that gets into, well, what percentage are they going to put in? If they're going to put in 1% of their assets, that'd be great, but 5% would be better. And so I think that there's a lot of kind of questions along that time frame. And so I think, one of the things that Matthew highlighted is like, we will be able to put a dent in the national debt. How much? I think maybe we can chop the tail off and say it's unlikely that the Bitcoin Strategic Reserve will be able to pay off the full national debt. Right? If you think of the numbers that he's using as his assumptions, like those are, I think, pretty fair. And even if you crank on them a little bit, you still don't get there. And so I think that what we should be optimizing for is, can it be part of a broader solution to get this debt problem solved, right? Bitcoin can't be the magic bullet, but it probably can be a pretty good, piece of a larger plan to get the national debt under control.
Mm-hmm. I should add one number to your point on like what is the growth in the stock market over the next couple of decades. No one really knows, but if we use a 7% number, which is kind of the long-term average, if financial assets grow at 7% and BTC grows at 25% for the next 25 years, then Bitcoin's market cap will be 18% of global financial assets. So it will be a meaningful reserve currency. And the 18% is kind of an interesting number because that is kind of the average gold allocation by non-US central banks. And, we're not going around paying each other in gold every day on an individual level, right? But gold is a strategic reserve asset for much of the world.
Contrary to arguments that a U.S. Bitcoin reserve signals weakness in the dollar, Sigel suggests the opposite. A Bitcoin reserve could enhance U.S. fiscal and monetary dominance, aligning Bitcoin's growth with the dollar's global strength. He highlights the increasing adoption of stablecoins as a driver of dollar demand, illustrating how Bitcoin and the dollar can coexist and reinforce one another in global markets.
Gold is a medium of exchange because what are they doing is the largest pools of capital are exchanging value from time to time. They're either buying or they're selling gold. They're just doing it in really big amounts. Nobody's buying coffee with gold. And so we've become so accustomed to what is my medium of exchange. I use the dollar for the buying of coffee, that we are trying to overlay that like heuristic onto the store of value. But real estate is not really a medium of exchange, right? Gold, you wouldn't think that, but actually for central banks, it is one of the medium of exchange, right?
It absolutely is. It's a tradable asset.
Yeah, they
Collateral.
do this in a very interesting way. And so I do think that Bitcoin maybe got put in a bucket. And, look, the promise of the white paper was peer-to-peer electronic cash. So rightfully so, people said, well, it hasn't yet become the standard for buying coffee. But I think that as this evolves and we start to see the holders and stuff change, maybe that's the better way to think about it, is it can be a medium of exchange, but just for these larger, kind of pools of capital. And it's more infrequent and larger transactions rather than, kind of small, very frequent transactions.
Yeah, there is an argument out there that a U.S. strategic Bitcoin reserve would signal fear about the future of the dollar and the market would take that badly. I think that's a very defeatist argument. If you take it to its conclusion, then why should we do anything about our kind of fiscal recklessness. So, currencies are famously an ugly contest, or to change the metaphor, you don't have to outrun the bear, you just have to outrun the guy next to you. So I've always said that Bitcoin is more appropriate for emerging and frontier markets who often don't have control over their own currency or have structurally weak currencies. If the U.S. jumpstarts, a global strategic reserve for Bitcoin adoption, we would just be cementing, our kind of fiscal or monetary dominance. So yeah, I don't love that argument that we should just do nothing and see what happens.
Do people believe in the dollar already? And there's a lot of countries around the world who, without us doing anything with Bitcoin, already are talking about getting off the dollar, using other assets, etc.
Building gold reserves.
Yeah, and so I think that there's some questions there that exist even before the Bitcoin thing. The second thing is we can look at the historical trend, which is that as Bitcoin has gotten stronger, so has the dollar in terms of its percentage of international trade, in terms of kind of relative strength to other fiat currencies that maybe aren't as strong. And so I tend to believe that things in motion stay in motion. If Bitcoin and dollar are both working together, you add in things like the stable coins that are really driving dollar adoption globally, et cetera. I just think that it's really hard to make an argument that, one trend will continue and the other one's going to do a 180. But I think, it's kind of where the theory and reality are going to come together. And although not a great answer, we may just have to run the experiment to find out.
Yeah. But one of the most persistent relationships over time for currencies is just simply looking at the relative GDP of the country. So, what are the big currencies? There's dollar, and then there's yen, euro, and pound. And Japan, EU, and Great Britain continue to lose relative GDP share to USD, or US economy, and emerging markets. So the forward performance of those currencies seems to us to be pretty much baked in the cake. And the question is, what's going to fill the void and take market share? Is it going to be RMB? Is it going to be Indian rupee? Is it going to be Bitcoin? Those are the choices that we can collectively make. Our argument is that it's better for America if it's Bitcoin, because we can at least capture some of the Bitcoin-denominated GDP that will occur.
Sigel emphasizes the need for experimentation to understand Bitcoin's role in the evolving financial landscape. He compares Bitcoin to other potential alternatives, such as the Chinese yuan or the Indian rupee, concluding that Bitcoin offers the U.S. a unique opportunity to capture a share of Bitcoin-denominated GDP. This proactive approach could position the U.S. as a leader in the digital asset economy while mitigating risks associated with competing currencies.